Hi, I'm Jim Jubak, and welcome to my YouTube video for today, February 23rd. If you like this video, please give us a thumbs up, subscribe to my YouTube channel. That way you get notification of when the next video goes up. I do about 3 a week. If you want more of my stuff, you can read my posts and 3 portfolios on my free site, jubakpicks.com. If you go to the free site, please sign up for the alerts. Or if you want to subscribe and get 6 portfolios instead of 3, more stock picks, options, ETFs, you can subscribe to my paid site, and that's Jubak Asset Management, jubakam.com. Links to all that are down below. The topic of today's talk is Russia, sanctions, and the Federal Reserve. Now, we all know the Fed is going to meet on the 16th of March, and the consensus is that we're going to see a rate increase. And the big wonder was how big an increase we're going to get. Betting back in December was it was going to be 25 basis points, which is a normal rate increase. More recently, in late January, early February, it got up to a bet on that was going to be two 25 cut raises or 50 basis points, a big one. So that has now been falling back a little bit. And I think there are reasons for that. One is that the world just seems like a much less certain place. And there's some logic to the fact that maybe the Fed will want to see what the effects on the US economy and the global economy are of any Russia sanctions, Russian cyber attacks, rising energy prices, on inflation, all of that stuff. Chicago Mercantile Exchange runs a Fed tool that looks at the prices in the Fed futures market to try to estimate what the attitude is toward rate increases. So today the odds of a 25 basis point cut have climbed to 65%. Odds of a 50 basis point cut have fallen to 34%. The market is starting to say, well, maybe the Fed will not do as much as we thought. Now, if you go further out, what's very clear is that the market hasn't decided that the Fed is going to do nothing. It has decided that the Fed is going to maybe push off some of those rate increases, so we won't get two raises in March, but we'll put it off until May, and we'll put it off until June, and the odds for those months have been going up. The other thing that's interesting is to note that in the May calculations, May is the first month where more than 50 basis points shows up, and it's got about a 10% chance of a 75 basis point cut. If you go out to June, you've got a 44% odds of a 75 basis point cut from now to then. Not cut, increase, 75 basis point increase from now until then. And you also see the first signs of odds for a 100 basis point increase, and that's 17% or so. One of the things that's interesting going on right now, and I'm going to look at a chart of the VIX, which is the volatility index that measures hedging against the S&P 500, you'll see that we've had a pretty steady increase, and this was based on estimates of what the Fed was going to do, not so much what was going on in Russia and Ukraine. And then recently we've seen a big surge. We're headed back to the territory where it has topped out, the VIX has topped out before. So 30 back in the end of November, 32 roughly at the end of January. Right now we're at 30. Will the VIX go higher? Probably. Since the situation in the Ukraine and Russia hasn't settled and the Fed still hasn't met, will it break through that and move us up to, say, 38, 36, 37, as people get more and more afraid of volatility. The other chart that I want to look at is the chart for the TLT ETF. This is an ETF that looks at 20-year treasuries. Not the most sensitive to interest rate increases, but a good measure of what's going on. And you notice that this charts the price of those, which have been coming down with the prospect for a rate increase. And then you see that we moved back up, and now we're moving back down. Not a huge move, but definitely the market is saying, hey, the Fed is going to do this, whatever happens with Russia and the Ukraine, and therefore bond prices should come down. So that's where we are on February 23rd, with worry increasing, uncertainty increasing, people still assuming the Fed is going to increase rates, but thinking maybe not 25 but 50 and put off the second 25 basis point increase. The idea that the Fed might put off more of its rate increases until the May or June meeting, but that they're still coming. All this, of course, is predicated on events that we don't know, the outcome in the Ukraine and here at home, where undoubtedly there will be some cyber attacks if the U.S. imposes sanctions on Russia, which I think it will. Anyway, thanks for watching. Please, if you like this video, give us a thumbs up, subscribe to my YouTube channel, and if you want more of my stuff, you can go to my free site, jubakpicks.com, 3 portfolios, stock picks, etc., or to my paid site, jubakam.com, which has 6 portfolios and includes ETFs and some options plays. And both of those are down below. Thanks very much for watching.